Hello, my name is Tiffany, and along with Nakea, Ruhan, and Kainoa, we will be comparing the companies Nike and Adidas using the financial analysis of balance sheets and income statements, stock analysis, and company news. Of the next slide. So introducing the topic, we have Nike, whose CEO is John Donahoe, CFO is Matthew Friend, Chairman of the Board is Mark Parker, and their headquarters in Beaverton, Oregon. For Adidas, the CEO is Casper Rochted, CFO is Harm Ohlmeyer, Chairman of the Board is Thomas Rabe, and their headquarters in Germany. So Nike's history and major products. The story behind Nike, the company was founded in January 25th, 1964 as Blue Ribbon Sports by Bill Borman and Phil Knight, and officially became Nike on May 30th, 1971, and the name comes from Nike, the Greek goddess of victory. The mission statement is to bring inspiration and innovation to every athlete in the world, and if you have a body, you're an athlete. Their major products and services are athletic footwear, apparel, equipment, and accessories. Adidas history and major products. The company was founded by Adolf Adi Dassler, who made sports shoes in his mother's laundry room in Germany after his return from World War I. The mission statement, to be the best sports brand in the world, and their major products and services like Nike are footwear, apparel, and accessories. The external auditors for Nike is PwC, and they stated in their opinion, the consolidated financial statements are presented fairly in all material respects and in conformity with acceptable accounting principles. And Adidas external auditor is KPMG, and they stated the accompanying consolidated financial statements comply in all material respects with EU and German law and give a fair view of the assets, liabilities, and financial positions. And next is Nakea with financial analysis.
When the COVID pandemic struck, both Nike and Adidas had to react quickly. And with some shipments being delayed, sporting events such as the NBA Finals and the Olympics being postponed, COVID-19 severely impacted the salaries and operations of both companies. This is reflected in the partial stock market crash last year, which affected the stock value for each of these companies. However, sportswear is becoming more popular, in particular with people working from home. And although gyms may have been forced to close, many people are still working out. Adidas and Nike will continue to benefit from these trends. And as a global industry with strong strategies in place, both companies will very well position themselves for the years to come to recovering financially. It is instances like these where a company will either succeed or fail due to their respective CEOs. The fiscal 2020 Nike Incorporated revenues declined by 4% to $37 billion as revenue growth of 7% of the first 9 months of the fiscal 2020 year. It was more than an offset by the 38% decline in the fourth quarter due to the impacts of COVID-19, making Nike not as profitable in the fourth quarter. At the end of December 2020, total assets were up 2%. That in euros, it's 21 billion versus the 20 billion in the prior year. As it is increased in cash and cash equivalents more than offsets the decrease in the right of the assets from the leasing agreements due to the planned depreciation immortalization. Revenues decreased 14% on a currency neutral basis due to the widespread store closures and lower traffic when stores reopened. Adidas was able to achieve a gross margin level of 49%, limiting the decline of a 2% as a result of the revenue shortfall. The company's operating margin decreased by 7% to 3%, and the net income from the continued operations decreased from 78% to 429 million euros, making Adidas not as profitable in the fourth quarter. Now we have Kainoa presenting. Thank you.
The chart shown above, the sales for Adidas increases when it is compared to the previous yearly quarter. Within net sales from 2020 to 2021, it has increased with a percentage of 51.5%, which shows the company has done a great job with recovering. Adidas has also managed their expenses very well, with the operating profit showing profit as compared to 2020 with a 4.9 increase. The company shows great net profit of 407 in the year of 2021. Overall, you can say that Adidas has worked on their operation and management properly. The company has done much better in June 2021 as compared to June 2020. The following financial analysis chart, some notable trends that were seen in both companies were a downturn during the pandemic. Both experienced growth in the past few years as the e-commerce market continues to develop, and both companies have a good recovery in 2021 following the 2020 revenue. The current ratio of Nike has increased as compared to the previous year, which means the liquidity of the company has increased. Nike has improved in the current year 2.718 times compared to previous year, which is 2.481 times. From this ratio, Nike is easily able to fulfill their obligations and has the short-term ability to repay its debts without borrowing any future liability. As you can see above, the current ratio of Adidas has increased from 2020 to 2021. The liquidity ratio has improved in the current year from 1.4543 times compared to the previous year at 1.377 times. In the previous year, the current ratio of Adidas was in a bad condition, but with the following year, the current ratio puts the company at an ideal condition. With that said, Adidas is easily able to fulfill short-term obligations. The debt-to-asset ratio has decreased for Nike from 2020 to 2021. This shows the borrowing power of the company increased, but has remained in poor condition. The ideal debt-to-asset ratio would be 40%. However, the ratio of Nike is at 66%, which puts it at a poor stage. As for Adidas, the debt-to-asset ratio has decreased by a very small percentage, which shows that Adidas' borrowing power is not affected. The borrowing power of the company is in poor condition as it is above 60%, which is typically poor. This indicates that the amount of assets that were financed by debt has decreased over the period for both of the companies. The times interest earned ratio is a measure of a company's ability to meet its debt obligations based on its current net income. A higher ratio is desirable for creditors as the company is seen as low risk in terms of solvency. Based on Adidas times interest earned ratios for 2019, 2020, and 2021, they would be more favorable towards investors and creditors. Next is Nikhil with the stock analysis.
The above charts are a stock performance comparison between Nike and Adidas in the last 3 months. As you could see, Nike significantly outperformed Adidas in the last 3 months. One share of Nike increased by $5 at a 3% value increase. In comparison, an Adidas share fell $21 or a 12%. These graphs show the company's stock performances over the previous year from November 24, 2020. In the past year span, Nike shares increased 30% or $40 per share. This again significantly outperformed Adidas, whose shares fell short of 6% or $10 per share. As you can see, Nike is having a significantly better bounce back from the COVID pandemic as opposed to Adidas. These last two graphs compare the company's stock over the last 5 years from December 2nd, 2016. From the perspective, both companies saw positive growth in the last half decade. However, Nike shares went up $123 over the last 5 years, while an Adidas share only went up $82. From the graph, you can see the Adidas took longer fall than Nike during April of 2020, which was mainly caused to the 2019 COVID-19 pandemic. Um, Dividends are the distribution of some of the company's earnings to a class of its shareholders. As determined by the company's board of directors, dividends may be paid as a cash or in form of additional stock. Over the past 5 years, Nike's dividend has increased by the average of 15% over the last 5 years. Nike typically pays quarterly dividends. At the beginning of 2020, Adidas executive board members intended to give out their annual dividends to their shareholders. Due to the global COVID-19 pandemic, executive board members decided to put a pause on the dividend payout and resume the company's payouts in February 2020. The PE ratio, the price earning ratio, is calculated as the stock's current price divided by company's trailing 12-month earnings per share, telling us how much an investor is willing to pay for a dollar of company's earnings. Long-term average is around 15, and the normal is around 20 to 25. So on average, investors are willing to pay $15 for every dollar per earning. As you can see with the Adidas PE ratio, 43:35, this means that the investors are willing to pay $43.35 for every dollar on the earning. This could be considered bad. A preferred lower number is preferred, but may signal that the stock price doesn't accurately reflect the true value of the company's base earnings. There is no specific number that indicates expensiveness. Typically, stocks PE ratio below 15 are cheaper and stocks above 18 are higher. As you could see, Nike's PE ratio is 32.88. So Nike would be a better PE ratio. So that means that the investors are willing to pay $32.88 per dollar on the dollar of earnings. And now we have Ru on with a conclusion. Thank you.
The Nike company news, there is cut sales expectation in 2022 and expects holiday delays and supply chain closure, Olympics, Kobe's estate ends partnership with Nike, sustainability initiatives, Move to Zero project, 140 million grants committed to the Black community and organization addressing systemic racism, and Xinjiang forced labor controversy. And for the Adidas company news, they present their own game strategy for growth and investment. Reach all recycled materials in 2021, completed 2020 sustainability goals, launches resale program partnership, Olympics, funded scholarships and donated to support Black-owned business, donate to relief funds, plans to sell Reebok brand, and Xinjiang forced labor controversy. In conclusion, after analyzing and comparing the two companies' financial growth, our team has decided that invest in Nike over the last 5 years. Nike stock shares outperform Adidas by 131.17%. Nike has also rebounded faster than Adidas following the height of the COVID-19 pandemic. Both of these companies go head-to-head in the sports apparel market. While Adidas has had great performance, Nike remains the leader in innovation and popularity. Nike keeps up momentum with their exceptional recovery during the pandemic and continues to outperform the market. Nike's EPS, which is $4.92, it's greater than Adidas EPS, which is $3.77, demonstrating that their stock has greater value. And thank you guys for watching.
Thank you.